Okay, so with this video, we're going to be dispelling one of the myths that seems to be coming up a lot in the last few days, or at least most recently, if we're looking at some of the recent YouTube video posts that have been posted on this channel and in some of the comments that I've been seeing. So one of these centers around the Golden Cross technical analysis event. So I just want to give people a bit of a instruction here, educational video here, understand what exactly this means. What exactly are we talking about here? So here's an example of what a golden cross typically refers to. Here we can see that there are two moving averages on this chart. You've got share prices, you've got this black line here, which is the 200-day moving average, and then you've got the blue line here, which is a 50-day moving average. Then here you've got these two moving averages crossing over one another. This would be the shorter term moving average crossing above the longer term moving average. For some reason, the market calls this a golden cross. This was around way before AMC and GameStop short squeeze activity became a thing. This has been something that's been, discussed a lot, and it's something that commonly comes up. But as we can see here, it's a very simple event. There's really not much going on here that's extremely complicated, and it's really just one moving average crossover. So in my view, whenever I take trades, I look for more signals than just a simple moving average crossover. You will see moving averages on my charts, of course. On this chart, I've generally got four moving averages, as you can see here. So this blue line here would be the 200-day exponential moving average because this is the daily chart. Purple would be 100, orange would be 50, and the yellow line would be the 20-day exponential moving average. So in this example here, you've got a much more simplified version of what a price chart actually looks like, and you have this moving average crossover. Okay, so let's just see how this actually applies to the current situation with GameStop and AMC. First of all, what I need to point out is the fact that it's very difficult to even look at this price chart. Things have flatlined here so much that even if I zoom in here as much as possible, it's still very difficult to see what is actually going on here. Okay, and this is significant because all of these moving averages at this point are essentially sandwiched together. You really can't even see what's going on. Okay, now is there some possibility here that some of these moving averages are crossing over the other ones? Yeah, it might be possible, but the changes here are so minor that you can't even see what's going on. Okay, in addition to that, you do not have a typical golden cross formation here. This blue line is the 200-day exponential moving average. This is typically viewed on the daily time frame, as you can see here, the 200-day time frame. This isn't on a 4-hour time frame or anything like that, although some of these people will have you believe this. I don't know what's going on here. Look at this thumbnail here. Who is this lunatic? GameStop is one word, by the way. GameStop and AMC Golden Cross with like an explosion there or something like that. This person has no idea what he's talking about. Okay, this lunatic. Okay, would you like to see this person move in next door to you? Would you like to see this guy dating your daughter? Okay, would you invite this guy over to dinner? I wouldn't. I would be terrified if this guy moved in next door to me, and I'm certainly not going to be taking investment advice from Trading Jesus. Okay, this person has no idea what he's talking about. When moving averages flatline like this, moving average crossovers mean almost nothing because you could have a very small movement in share prices, and that could inspire the exponential moving averages to start to cross over one another. Is it a significant break? Not even close to being a significant break. As you can see in this example, you've got some major differences here between the 50-day moving average and the 200-day moving average. These moving averages are far apart, and then a crossover is a more significant event. There's a real rationale here. I'm not saying that the golden cross isn't based on anything. This logic here predates all of this short squeeze stuff with AMC and GameStop. This was around way before then, and there is real logic that's being applied here. It just suggests that the shorter term moving average crosses above the longer term moving average, which essentially suggests that the trend is about to change. More near term, the price action is starting to move higher in ways that exceed the longer term moving averages. So the near term trends are starting to develop in ways that change the older trends. Okay, there's nothing wrong with this logic on its own, but it's incredibly simple and basic. And anybody that's structuring trades based on this type of trading activity is going to lose money. You need more information than this. You can't simply base your ideas on one simple minor event like this. If you see this in combination or in confluence with several other technical indicators, then that's perfectly fine. If you're using it as one additional reason to enter into a trade, that's perfectly fine. But using this on its own is a recipe for disaster. It's a recipe for failure. And if you were to take trades like that, you could easily program a bot to trade based on this type of information. It would be the easiest thing in the world to do. This is incredibly basic, and there are many bots that do this. Okay, so if this is all that it would take to successfully trade in the stock market, why isn't everybody a gajillionaire right now? Just program a bot to do this, to find a golden cross. They're happening all the time. Okay, but they are not happening on this chart. This chart is flatlining. Okay, I can't even really show the chart because it's such a ridiculous flat line here. This is not normal stock price behavior. Okay. This is not what a normal stock looks like. Usually you see, sort of a cyclical upward and downward price movement. For example, the Christmas season happens and you see retail stores start to do better. You see certain computer components that are cyclically designed to be released at certain periods of time, and then sales increase then, and then they diminish during other parts of the year. None of this is happening here. Okay, we can go back several years on this movie theater chart or on this video game chart. And I don't even want to call this a video game chart, okay, because this is worse than video games. This is the blockbuster of video games. Okay, and everybody likes to talk about how much cash GameStop has and all that. All of that happened because of the short squeeze activity. It didn't happen because GameStop fundamentally changed in any way. Okay. Are there reasons to believe that people might want to continue to buy that disc that holds the information for the video game, and they don't want to wait for a download to happen or something like that, or maybe they want to have a backup, a data backup, for their dumb Call of Duty game or what Fortnite, whatever it is they're playing. I don't completely dismiss those arguments. Okay, but the idea that you would choose this as a stock to invest in when there are so many other companies that actually make legitimate products that are changing the world. Why would you not focus on one of those rather than this stock? Why would you focus on a movie theater stock, a company that sells you nachos that have been sitting under a lamp for the last 9 hours? Okay, just so that you can sit there and watch some dumb movie that you shouldn't be watching anyway, because it sucks and it's low IQ and you're just wasting your time, and your brain is turning to mush as you're watching what is it? Deadpool and Wolverine. Oh my God. If you're investing in this stuff, you deserve to lose your money. If you refuse to do any actual research and find companies that are actually building products that are innovative and that are changing the world, you deserve to lose your money. And the market is extremely efficient at taking it from you. And as we can see, this is what is going on with the people that are holding onto this stock. There is no golden cross here. Okay. You can listen to Trading Jesus if you'd like. Okay. You can invite him over to dinner. You can have him date your daughter. Okay, you can do whatever you want. I'm a libertarian. You're free to do whatever you want. Okay, it's not what I would do. So if you people want to continue to focus on these price charts, read into them to such an extent. I mean, like a lot of you people say that I'm biased, which is complete nonsense. I don't care one way or the other. If this stock goes to the moon tomorrow, that's perfectly fine. It doesn't mean anything to me. I don't have a problem with that. That'd be great. Okay, I'd like you all to get just as rich as this guy is trying to look. Look at him in his gentlemanly suit. Please get out of here. Another thing I was going to do was go back and look at some of these older videos that are like a year old, telling you about how the MOASS is happening next week or whatever, and the video is like a year and a half old. Here it is again. GME, the Golden Cross, 2 months ago. Okay, terrific. Look, what is that? ET flying to the moon? I mean, I really did want to go back and look at some of these older videos just to see how well they aged. None of this wound up happening. Of course not. Why would it happen? You're buying the blockbuster of video games, and you're buying a disgusting, ratty, flea-infested movie theater chain that doesn't even actually care about you. They don't care if you make money on these trades. Are you joking? Please, you're making these people rich, I guess. You're making these companies rich, not the investors, and also not these people posting these videos on YouTube. Because guess what? 10,000 YouTube views doesn't make you very much money. All of this is a waste of time, and these stocks are going nowhere. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.